What's happening, guys? I hope everybody had a great weekend. This particular Sunday scan is for the 19th of April in the week ahead. Last week, I forgot to give away anything. So I'm going to do double time this week. So Momentum Traders book is going to Charles Smith, and the t-shirt's going to Kenneth Alvis. Just email me, webmaster@investorsunderground.com. And as you guys know, all you got to do, like the video, and if you just write your key takeaway with the timestamp, that helps us kind of locate what those aha or key moments were for you. And I think it's going to help and does help other traders who maybe have watched the video once but didn't pick up on it. And they can go back through the comments and review and see somebody else's key takeaway. And I think by doing that, you're actually helping more traders. So I appreciate you guys taking the time to do that. That my thank you to you is by picking, random people every single week who have done that to, either get scans, Icon meals, Momo Traders book, the t-shirts, and whatever else I give away, I forget. May 22nd, we are doing the second one-day event that we've done. We did a COVID one-day event back last year, and we did a 2-day virtual event in October last year. But we're going to do the one-day event again, and that's going to be May 22nd. I have a link here to sign up for the Traders for a Cause email list. And Zach will be reaching out this week with all the information that you need. We'll be live streaming it. We want you guys to be part of it and check it out. We're working on a theme. We're working on speakers. So, it's kind of a work in progress, but it's going to be great as always. And I do hope that you guys join us. So make sure you guys sign up on that, and he will be sending out that information this week. I know a lot of people are asking me about Dogecoin. Some people call it Dogcoin and all different things, but it appears that it's Dogecoin. So if that's your key takeaway, to learn how to pronounce it, that's great. But for real, a lot of people are asking me, and this is a similar situation to GameStop or originally with Bitcoin, and people coming out of the woodwork and asking like, hey, I know somebody that made X on Dogecoin. What do you think? Do you think it's still a good buy? Do you think it could go to $1? Do you think it's the next Bitcoin? And we're in that process. The cycle of you've got your early people, and then the people that are kind of still in denial but buy anyway. Then the super bullish people, and then you get back into that denial stage as it starts to go down. Are we there yet? I don't know. But would I expect it to go where it did? No. Did it? Yes. The only key takeaway that I could say, same thing that deals with trading, right? If you're always trying to go for that black swan event, those black swan returns, you will come up short. You're going to be on the wrong side of probability, right? So in a situation like this, you only need to get rich once. Just remember that. And, by locking some in, if this moved the needle for you, I'm not talking about, sell it, it's going down and all this stuff. I'm talking about if this changes your life, if this move that needle for you financially, where you are now potentially financially independent or financially wealthy, then, it's worth maybe making some changes, adjusting your risk, because like I said, you only need to get rich once. And most people don't realize they were until they lose it, right? You can probably do the same thing with stocks, or you can do the same thing with stocks, right? And everything's all perfect until you finally get hit, and you look at your losses, or the stock that you decided that you were going to hold, and you didn't care about anybody else, you didn't care about any risk. All of a sudden you look and you're like, oh, I knew I should have sold it. And it's that moment where you think about all the things you could have bought, all the money you could have had. And, look, nobody got ultra wealthy by, just taking the first sell. I get that. But just don't underestimate the fact that, you just got independently wealthy on a black swan event, and the probability of it happening again, who knows? Maybe it can. But just be safe out there. Be cautious. Don't just buy stuff because your friend got rich off of it and you're trying to, kind of join the ranks. I mean, the exponential returns that happen, it's going to be very difficult to do it again. But right now you're in that period of everybody wants a piece of it because they know somebody that got rich and they're afraid that they're going to miss out on the next one that goes to, 60,000 like Bitcoin, right? So it's a very easy sell right now in the sense that the story, what people just want to be involved. And so that's kind of that process that it's going through. And whether or not it has that next leg or it's going to be 6 months of just slow, steady fade, which you've seen on a lot of these momentum stocks, that remains to be determined. We don't know yet. And, for me, I always like to just be on the side of probability and just make sure that you're playing with funny money at this point, in things like this stuff. And when I say funny money, it's not going to change your life whether or not you lose it all. But if this did move the needle, if it did make you rich, then consider the fact that you can secure a piece of that to be sure and maintain that success. We talked a lot about back in 2000 and I guess 18, 19, where it used to be like 1, 2, maybe 3 A+ setups per month, right? And it was about understanding and focusing in on those to really make your year or potential career on particular trades. And then all of a sudden, flash forward 2020, 2021, and you've got an A+ setup every single day. The difference between A+ and then this trade of epic proportions, the magnitude, I've used that word twice this year, on Riot and on Riot. And, it happened twice, Riot Mara, just last week off of the coin IPO. Understanding everything's coming to a head. Everything's coming into that coin IPO. Everybody's buying sympathy. Everybody is max long, max exposure, max risk. Everybody is so hyped up for this thing. And if it does not continue to go up, what happens? And then everything comes apart. And that's exactly what happened on these ones. So that's why I was super, super prepared for it. Understanding when those setups happen, understanding the themes and the sectors and how everything is just lining up to this one event. And look, if it went to 500, we would be looking at 52-week highs probably on Riot and Mara. That's fine. You can adjust and you could have made that trade as well. But if it stops going up and everybody is at their max long, max excitement, max everything, and they're on the wrong side, where do you think it's going to go? And where do you think it's going to unwind? So that was the opportunity we had. And I also got long on some of the bounces, which is not always, the case for me. I love longing. I go long every single day. But sometimes I just trade that one fade. I leave it alone. Then you see it do that V-shaped reversal, and I'm upset that I didn't try it. But I did do those both this week, and it was pretty nice. Second thing I wanted to talk about is Clove, CLOV reminded me of it. These types, these Twitter types of investors and things like that are much like CCIV, SNDL, MVIS, UAVS, you name it, right? So there's this period of time where where newer traders are convinced that they're right because price is proving them right. It may not make sense to somebody that's been doing it for a long time, but with that comes adapting, and it's just, it is what it is. And it doesn't matter that certain names are running and it doesn't make sense for them to continue to go higher. It doesn't matter that they're overvalued by 100 times. It doesn't matter any of these things. But what you need to be aware of is when your original investment thesis is X, and then it becomes Y. And so the point of that is if you look at these Clove investors, CLOV, at first it's, this is the best company. They're growing at the most, incredible rate. This is a great long-term buy, blah, 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 blah. And now the long investment thesis is short interest is X percentage, short squeeze, hedge funds are going broke. It's the next GME. And so now you've got this Y thesis, but originally it was X. So it's that transition and that cycle of trading and investors, and it's just, this is what you have to be cautious of, especially if you're newer. And this is also why I put my swings in one account and my day trades in the other account, right? If you have a day trade that becomes a swing trade, is it because you were down on it, you didn't want to take a loss, and then it turns into something that you didn't want? Or you had a swing trade, but you put it in your day trade account and you scalped right out. You didn't let it work. You were right all along. But because it was in the wrong account, you didn't let your thesis play out. So what's happening in this situation is people are changing their thesis, based on what they write, what they believe, what they think, in real time. And, it's going to end the same way that UAVS did and MVIS, CTRM, SNDL. We knew in the end, economics, you learned all about supply and demand. In the end, supply is always going to win. But as a short seller, you have to be cautious, obviously, on the front side because things can last longer than you expect. But once that turns, you have to be aware. And a lot of people have the hardest time understanding that, seeing that until it's too late. And just like all my other videos, every other Sunday, warning on UAVS and MVIS and all these other ones, SNDL. My timing might be off. That doesn't mean that I'm biased. That doesn't mean I'm upside down. That doesn't mean that I'm saying that it's trash and it can't go up. But they all end the same way. And so a lot of people have changed their thesis. Just be aware of that. Be aware of why you went into the trade and your current reason why you're in the trade. There's been a big transition from trash names to quality names. You see the market continue higher, and they're buying up all these stocks that are in the indexes and just really quality names getting rebought after they had a brief kind of timeout. But what you're seeing is all those trash names. If you look at the 6-month chart, all the SPACs, all the big momentum runners that made 0 sense fundamentally are all coming way back in. So in the end, supply wins. A couple people had asked me what inning we're in. I still think we're in the early innings. I still think that we're at the highs on the market, and momentum has shifted, but now the momentum has shifted into Clove style, CLOV, where they're creating these liquidity events where, the stock has pulled back so much and then they just churn the volume, get an intraday squeeze going and then squeeze everybody out and then back to reality. We just saw that on XL. We just saw that on RMO. We just saw it on FUBO. The key is watch that volume, be aware of the 100, 200, 300 million share type days, at least if they're tracking for it. You don't want to step in front, but they are some of the best types of trades lately. And I'm sure one's going to get away. I'm sure one's going to go and do a 6 to 7 to 8, and then all of a sudden it's at 15. And people are short hundreds of thousands of shares, and there's going to be a major trade. I'm sure that's coming because there's been a lot of these in a row, just like Clove, which kind of trains people to trade size. So I always have my antenna up just in case. And if I am wrong, if I size in, it's not doing what I think, I need to size down. I need to adjust my size. But I like this type of trading because you have to worry less. There's always market risk, but you have to worry less about the circuit halts and one newsletter coming into the trade, which can, manipulate it one way or the other. And so I think that is, at least helps me have a little bit more conviction and confidence in the trade, knowing that I can't get pushed around one way or the other by, one person with a bunch of sheep that are following their move. So that is one thing that I love about that. And, I think that the inning talk, what inning are we in? Maybe we're in the next inning or the inning after, but I still think we have many, many years, at least one, if not two, of solid trade opportunities. And, the liquidity is not going away. It's going from sector to sector, theme to theme, and you just have to find it. And if you overstay and over push on certain stocks that are, not suggesting it's there, then you're going to find out quickly, that you need to be extra cautious. So, I've seen that on some of my swings. I've been pretty slow on swings. I got Playboy, PLBY was a fantastic swing. I'm still there. I got long. The idea was under 25 and scale. And I let that work. That was a major trade. It was about $20 a share. And that was the standout. But everything else is, it goes up one day and kind of fades off the next 3. Up and fades off. And it's not really going anywhere. So I haven't been focused as much on swings. Just small here and there, but it hasn't been really paying me out like it did, towards the end of the year last year, and things like that. So, question sent in through Twitter. First and foremost, Nate, were you viewing MTSL on Friday as a possible squeezer, or did you have conviction it was a short? I was thinking about slamming pops above 5 and could be attracting more shorts, setting them up for a trap. I was clearly wrong. Thank you. So at 8:50 a.m. Every day, as you guys know, I do the broadcast. So on the broadcast, I compared it to SPRT. Now, that never means that it's a lock. Never means it's 100% going to do it. But for me, anytime I make a trade, I go back and I say to myself, where have I seen this before? And we just saw that exact move, almost the same level, price range. Same level from the 2s up to the 5s, 6s, whatever. And it was almost to a T, and it almost acted the same. And so that gave me conviction with that idea, but I still need to be safe. Because it is a thinner float, because of the nature of potential trap and squeeze in this market, I was probably too safe. I shorted and I scaled in and I covered quickly around a core and did that a few times before I started to become convinced that it was just going to be a full day fader. However, it ended up being pretty easy, so that in itself makes me a little nervous, because if it was that easy to unwind, what if they just squeeze out towards the close? So I was proactive with covers, but it ended up going out on the lows. So it was a fantastic trade all around, but that idea just came from, where have I seen this before? And if you actually go back, I gave you guys CLOV, RMO, XL, and FUBO. If you go back and study those charts, you'll see the same thing. The key is not sizing in front if you're looking to short. On Clove, I was long, and then I got short. But the key is just not sizing on the front side. Otherwise, you're going to be part of the problem. You're going to get squeezed into that. For me, those are the best types of trades for my style. How about discussing and explaining the liquidation trap? So liquidation trap, I go over on Project Impact. I've got a link in the scan as well. That is all our Traders for a Cause recordings. But if you click on my name and go back, I think it's about halfway through the video. I give an example of a recent one. This was a year ago. But basically what I'm looking for is high volume, and then pulls back the next day, consolidates the next day. But, let's just say it goes from 100 million to 5 million to 1 million shares. And there's no reason for shorts to cover. There hasn't really been a push or squeeze out or any type of flush where shorts get squeezed out. And if that's the case, and all of a sudden it pops up that third or fourth day when there's likely buy-ins and things like that, then there's a good chance that we might have some type of liquidity trap. And basically where you've got size that needs to cover, but they're unable to because there's no liquidity. And so then you start to get compounded move, and you saw that on JFIN. That was on a Sunday scan idea a couple weeks ago, and the next day it was nuts. That happened this week on WHLM. That doesn't mean they're all going to stay nuts throughout the day. That one actually ended up coming back in, but it had a nice squeeze out throughout the day. It retrapped, squeezed out again before it came down. But it's just the idea of shorts never got their chance to get out. They never got their liquidity to cover. And then if it skips up on air, they're going to be squeezed. And that's the idea on that. How to grow a small account. Take profit even when price target has not been hit yet. Better to lock in quick than to give it back again. So in this case, I think that if you're building an account, it's always good to lock, right? You should always think about a process and what makes a good process, and making sure that you understand the why. But you have to be building and getting away from that 25K level, 30K level, or whatever that ground zero is, that starting point. The further you get away from that, whether it's $300 at a time, 500, 1,000, whatever the case may be, you're getting away one step at a time. But you're going to get more and more confidence, and you're going to give yourself more and more wiggle room. The wiggle room is key, because people that are in a small account and they're by pattern day trade rule, they start to make all these decisions, right? And if you're at 26,700 and you're down $1,500, or you're right around 25K, now people don't take their stop because they're going to be under 25K, and then they turn it into a $5,000 loss. So for me, it's always about adding, for building a smaller account, the big moves, if it does as you expected, then go ahead and take the trade, or at least most of it. Because what happens is you expect something to happen, it does, but then you stay there anyway. You were only expecting X, but now you want Y, right? Because it started to work, you were right, so you wanted to let that work. No, that's not what you do. In my opinion, you go ahead and lock until you've built, and then you can have patience and let things work. Most important part is getting away from square one. And then the last questions were all related to Clove. One was, how did you learn to notice a level 2 that some big guy is massively unloading shares? On Friday, I traded Clove, shorted the 990s, recycled the shares, covered dips, but then overstayed. And how do you know when the trade is over? So the biggest thing that I tell everybody in the Traders Lounge. Traders Lounge is, we've got the momentum room, which is no BS, straight alerts, on topic, and no noise. And then we've got the Traders Lounge, which is, anything goes, ask questions, whatever. And, if I feel like I'm going to be noisy, then I'll go in the Traders Lounge. And so I was starting to talk about Clove, talking about, watch this level, start your recorders, watch this, see if it stuffs here, watch this tape, watch this. That was a huge stuff. And it's not necessarily about saying it ahead of time, although many times like Clove, I did. But it's about seeing it, seeing the commentary, going back, rewatching it. That's how you learn tape, and that's how you learn these situations. So the fade started to come in, and then there was this opportunity where it looked like it was going to rebound. So I had downsized a decent amount of shares. But when I downsized, the offer did not even budge. And in fact, it actually went a couple cents lower. So that to me said somebody is unloading massive size. And you can see that by the offers showing only X amount of shares. Let's just say a couple thousand. And you've covered 50,000 shares into it, didn't budge. That to me is like, hello, that's a huge seller. Somebody's unloading shares. And so that was the tell for me. So I immediately rescaled in around that core. Because of that. That was information from the tape. You could see that by going back and watching the recording. And the same deal with the second question on this, how do you know when the trade's done? You don't. But for me, I take the high edge trade. And typically that's the first trade and then the second, right? So the first one, parabolic move, sits back, stays heavy, flushes out. Second move, rally back, stuff, fade, done. Typically, I trade those first two moves and I let it be. If it continues to stay heavy, then I will potentially come back in. But I want to assume that they're going to kind of trap. And, at that point, it just starts to become choppy. I don't want chop. I want to get in. I want to nail the trade. I want to get out. And when I get in, I do not scale if I'm not on the right side. I need to wait and see when things happen. If it stuffs. If not, my goal is to cover flushes around the core until I see what I need to see. and that is failed follow through stuff moves. Just because a stock stuffs, and stuff means it comes up to a key level, ton of volume comes off, the offers do not budge and pulls back quickly. But just because it does that does not mean it's over. It's always what happens after the stuff. Does it stay heavy, or do they start to soak and form a new base and then blast through? That's what you have to be aware of. So that's about it, and then we'll get right into Sunday scan, and see you in a minute. All right, guys, so this is the second part of the scan where I go over what I'm looking to trade for the week ahead. As you guys know, I am not a financial advisor. This is educational, informational purposes only. It's, a chance for you to kind of see what I am thinking about for the week ahead, and hopefully, in return, that turns you into either a better prepared trader or, the ultimate goal is a better trader. Now, for me, I typically surround a move for 2 or 3 days. And, then I kind of take it off radar. I don't want to start to get chopped up, right? So I focus on where the volume is, where the move is, and then I move on. So Clove obviously had 250 million shares or so traded on Friday. There was a big opportunity there. We've seen this before. We saw it on XL, RMO, FUBO. This is the 4th time we've seen the same exact move. And, by this time, you should make sure that you're not getting bent on any one side of the trade, not shorting too early, not getting, into that add type mode. Very easily can be exhausting, if you're trying to find the top on a situation like this. So for me, what I think happened is, a lot of people put a lot of confidence in the daily resistance. So, that's great. And I do the same thing. However, I'd like to see it confirm. I want to see it kind of test once, pull back, and then when it goes back up and retest, I need to see if it confirms whether or not it's going to hold. And in this case, it did not on Friday. It actually went through 9, came back, checked in with VWAP, and then shot right back through the resistance. When it came back and double tested that little resistance, but now support level, that's when it started to take off. So I think a lot of shorts got trapped. That was all an intraday squeeze, squeezed everybody out, and then we need to watch for the signs of topping action. So right before all of this went down, I had told everybody in the Traders Lounge to go ahead and put on their recorders. I tell everybody in my room to have a recorder available. They're free. You can get them online, but you record the price action. You can record your level 2, time and sales, and chart. That is how you learn how to read the tape. That's how you learn to get better and more prepared and actually seeing this information and action yourself. It's not by somebody telling you what to look for. It's not by, somebody saying it every single time. It's about you actually seeing it, being able to watch it back, watch it with the commentary live. So as you guys saw that are in the room, that situation when I had mentioned a huge exchange of shares, that does not necessarily mean that's the top. A lot of time what they do is they do just enough to kind of keep it afloat, ramp it back through whatever the prior resistance was, and then pull it right back down. And as they break that prior resistance, that's the squeeze. That's their liquidity. And at which point you'll see refresh seller, slam down, stayed heavy since. That's the key. It's not about just one stuff move. It's what happens after the stuff move. If it stays heavy, then in this case, you have a nice failed follow through momentum. He had huge hidden sellers, huge opportunity. This is my top setup in this current market environment. This is the stuff that I love: XL, RMO, FUBO, and CLOV. We've seen it multiple times. Should have been prepared. We were prepared. Hopefully you are too. And I hope that we have more of these, because these are the types that I like, rather than all these thin names that a newsletter can just shove them into a circuit halt, and you end up getting screwed. So as far as the week ahead, I want to watch key levels. I always like to look left, figure out the channels. Where is the spot that I potentially would get chopped? And in my opinion, that's between 860s and 910s, right? Or 9s rather. So I don't want to get too aggressive any one way in between those levels. If it rips through it, I'd probably have a reactive trade. If it flushes under, I'd probably be looking for failed follow through momentum. Otherwise, I would probably avoid it. MTSL, we talked about this a little bit in the first part, but as you guys know, fantastic, all failed fall through momentum. Pretty weak close. I want to be aware Tuesday and Wednesday, just in case there's a liquidity trap. We talk about the liquidity trap quite often, and obviously, if this went from, what do we have? Almost 100 million, 95 million shares to a couple million shares tomorrow, and then Tuesday it starts to pop on a couple 100,000 shares, then we have opportunity, because there's likely going to be a lot of shorts that potentially will need to cover. This was easy to borrow everywhere. So be aware of that. However, much like I said on SPRT, it's very similar trade here. So I am expecting the same, and we could actually even go, a lot lower. This was a great exit for anybody that was heavily positioned in this name, because maybe they don't want to invest in the new merger, new action coming in. It was a great liquidity event because in this market, people decide that they're going to chase those things. So we'll see what happens. But higher the better, and I could see this completely filling the gap and going back under 3. But I could also, if it starts to go sideways, I could see it Tuesday, Wednesday providing another, pop. So I want to be super cautious. TQQQ, there's not too much to talk about this. It's a trade related to, the Apple, Amazon, Microsoft, the tech sector. And so you guys should have, or at least be familiar with those types of charts, those names, if you're going to be trading this thing. I like to have them all up, Microsoft, Apple, and Amazon, or at least a couple of them. I look for relative weakness, relative strength, and then that kind of helps confirm a decision that I might make. But it's been a great trader. My rule when I'm trading it is to cover first and rescale. If I nail a trade, I want to cover, at least half, if not more, and then rescale if it continues to stay heavy. More often than not, I am happy I did so because, as you can see, it likes to jump around. I'm very good at the entry, scaling in, but the hard part is just, not worrying about where it could go, locking into that big flush, and, waiting for it to stay heavy. And most times in this market, it doesn't stay heavy. So it's better to be covering along the way. Riot and Mara, pretty standard, pretty straightforward. Bitcoin's down 10% this weekend. So there's a good chance that these are going to gap down too. So we could have one of those gap down, flush outs, and reversals, in which case I would take the long. If we do have a gap down and it ramps up and it starts to stay heavy, I'd be looking for the fade. These are trading vehicles for me. It's no perma biased any one direction. Same thing with CLOV, same thing with everything else. I'm trading around that volume, that 2 or 3 day move, and then I'm moving on. And we just had that huge coin IPO or direct offering rather, and that's why Mara and Riot are on my radar. Under the failed follow through section. Now, as I always say, I've got my main watches, failed follow through for potential faders, continuation for potential longs, and then the staying familiar section. You guys can go to the description, click through, and see those all. That's on the blog post that I don't go over on the videos. But those are ones that I like to set price alerts for. EBLN was fantastic. I was long pre-market, as you guys know, from the fact that they had an earlier PR with Dogecoin, as well as, I think it was Litecoin or something like that. I forget at this point. But I knew people were going to be looking for potential sympathy trades off that Dogecoin move. And this was right there. It had a PR. It had the name in it. And so obviously it had a nice reversal. This could easily continue to go. I have it on failed follow through momentum because the cryptos have pulled back this weekend, and it's likely that it probably pulls back. But if not, I'd love to see failed follow through, potential push up towards 520, 550s. If it starts to go, this could easily continue to squeeze. And I do have a small position left. I sold about 3/4 of it. on Friday from the low 4 entries. Otherwise, if it stays heavy, I want to be there. I feel like it's going to, potentially just retrace that trade. We'll see. TIRX, this is sort of that dead cat bounce. So typically what I'm looking for is, where did it hang around? Where was there trouble? So, basically 1650s or so, 1640 to 1660s is that level. And, for me, morning move, watch it fade off. There's probably going to be volume tomorrow and Tuesday, and then it's going to be like watching paint dry. So this is one of those situations where it's just death, dead cat bounce. And so don't underestimate how far this can go. This could gap up $1 or $2 and continue to push. But I want to be on the backside of the move. So there's two trades here. Either it gaps up and it's over 1650s and you just be careful. And wait for the backside, or it goes up, kisses those 1650s, and then I'm looking for the failed follow-through momentum. Tiger, higher the better. I feel like this one might be on the last legs of this move. If you guys kind of remember JMIA, slow, steady kind of fail backwards. Same thing I'm thinking could potentially happen here. Whether or not it happens, we'll see. It's been relatively strong, but JMIA did the same thing, and same thing FUTU. So I'm keeping a cautious eye on those for the potential next failed follow-through. Sometimes, they do just enough. Which one was I going to show? I forget the name of the... there was another recent IPO that was a good example, but I can't think of it off the top of my head. Usually they kind of rebound. They kind of fade off. They look great again, and then all of a sudden it just kind of off radar, down. So that's what I was thinking for Tiger, potentially, if it can't get back over 20s. Under the continuation side, continuation is the ones that I'm looking for, potentially for continuation. Some I have positions in. VENAR. I do have a position in. I've been in for 2 days. I've been selling into the ramps along the way. But it feels like it should have died, and it keeps on coming back. So in a situation like this sometimes we see these open up and they're like $1, $2, $3. And because of the way in which it held, I held some just in case. If it fails and if it does not continue to hold over those 55, 60s, then I don't want to be part of it. But I'm just letting a winner work, and we'll see what happens. CGA. So far, so good. I actually was positioned pretty well over here, and I think it was either maybe this day or so. Yeah, it was right around here, and it pulled back 2 days, and I was like, you know what, screw it, I'm out. And I think I repositioned again, and again, it failed. So I finally rebought, and it was around this level over here. But now it's starting to compound those gains. So it'll be interesting to see how this one plays out. You want to assume that, it's probably a little overextended. But if this were to pop $2, $3 real fast, I'd be on the sell side. If it starts to fail a couple days, then I'll be on the sell side. But so far, so good from the idea early last week. PLBY, Playboy, this has been fantastic. As you guys know, I was swinging it. So the idea last week on scan was that if it starts to base, you can see the wicks that we always talk about, and you can see, they pretty much were supporting this level right under 25. So that's what interested me in it. I started into the trade over here. I added all dips in this day. I added this day, and we'll see what happens. If it pulls back too much, if it goes to the 35s, 36s, and it stays heavy, then I kind of feel like this is going to turn into a longer term type of trade versus the 3 to 5 sort of week trade that I kind of had in my head. So it already has offered $20 per share from the idea. It was one of the bigger trades that I've had this year as far as the swing trade. I guess that's not saying too much. January was great for swing trades, but my swing trades, I haven't really been putting too much attention towards swing trades just because, there's a lot of one-day wonders right now. So I need to kind of revamp the IRA to figure out some good swing trades. my focus lately has been, just mostly trading intraday. But my goal is to let this one work. Let's see. Ideally, we see a 40 base start to kind of come back in, and if not, then I will be, taking profits. SRNGU. I put on the position. I noted last scan, I believe, last Sunday scan. If not, it's been in the scan for members, but currently positioned here and letting this trade work. I'd love to add if it starts to kind of base over 1080s or 11s, something like that. And that's it. That's what I'm prepared for tomorrow. As usual, if you guys have any questions, reach out. Please leave a like on the video and leave your biggest key takeaway. As you guys know, we give away free stuff every single week just for doing that. So that's about it, and hope you guys have a good rest of the weekend, and we'll see you in the room tomorrow.